Good evening, this is Nick Inman from VolumeProfileTrader.com on March 10th, 2012, and this is a weekend update looking at the market. The sell-off that we saw back in the middle of the week ended up being a buying opportunity for now, and the reason why was because we got a great bounce off of the point of control for February, and that level was 1341 to 1339, and I'm going to bring in the chart. So we come down 1339, 1340, and you can see we got the bounce, and it was very easy because you knew what you were going along against, this good volume in February. You knew that there was at least an opportunity for some type of bounce, and it came, and it actually bounced more than I thought it would. It bounced from 1340 up towards 1370. Our target was 1360, and you can see it consolidated for several hours at those levels, and then continue to push higher. Now, the point of control right now for March is up above current levels. If you look at it right here, we are currently failing against it, and I'm in the belief that this 13 for now, and I mean in probably the next month or so, maybe the month of February, this 1377 level, these highs that we saw in general, and it doesn't have to be concrete, but that is the high for now. And what I mean by that really is there's more consolidation that needs to be done at these levels. You want to see the buyers hold this 1340 level to the downside, and if we develop a range between 1340 and call it 1380, it will give us the opportunity to have a decent size move one way or the other. And my expectations would be a continuation to the upside. I think this market has 1400, 1425 in it, but for now, I'm going to say that the upside, if you're a buyer at the bottom, 1340, where we caught a few good trades this week, and we're paid off, should have taken profits on some, but really, this could potentially just keep going. As you look at it now, if we're in an uptrend, then the weakness should be bought, and given that it's weakness against, bouncing at a monthly point of control, that's a good conviction. But current price action, if we start to fail up against these levels, then you're going to look for an opportunity back down towards 1340. So it's going to be interesting, and there's no one way or the other to tell which way this market's going to go from here. I do think that we have found the top end of the range, and there's going to be consolidation for at least a month. So let's look at the Dow. Similar picture. Just be patient and realize that the trade opportunities will come, just like we had on the middle of last week. NASDAQ, same situation, a trade down to the point of control level, a bounce, and then a push right back up to the highs. So that shows you that this volume level is powerful enough to give you a move straight up, from the lows to the highs, consolidated down at these levels for 8 hours, and then continued higher. So that's just something to be aware of. Gold, very nice bounce, and once again bringing in the accuracy. Point of control, January, down at, call it 1660. It's really at 1658, but round number, whatever. But the point is, we bounced off those levels, and right now we have a ceiling at 1725 or so, which is the point of control for February. You're going to have some selling pressure here, so I want my money back. But at the same time, you have people who got short gold on this move down, probably, unless if they caught it, quick, probably somewhere down in this range. So the buying that we see, if we start pressing above 1725 again, people would have looked at that for now as a great buying opportunity, and I don't think it's there yet. However, we did have a trade on gold, and if you took it, it was worth a double. What we did was, at the lows, I gave two trading ideas. One was the 163 by 165 call spread expiring this past Friday. That ended up working, and the value on that, you made $1.20 off of a $2 spread, so not too bad. And the other trade was buying the 164 by 165 call spread for 30 cents. That was also good for the full value of the spread, so you would have made 60 cents off of this trade for a triple. So that's a nice trade, and you know, you realize the adjustment of the time frame. We have gone from buying the weakness, and now we're doing more tactical trades. We were taking profits back in the week or two prior to this mini sell-off, and now that we were holding some cash, we were ready for the opportunity, and once we got that, we took advantage of it. Nice little trade. It's hard to say it's over, but it's just, keep your profits tight. Anything, if you did buy this week, put your stop at break even. A name like Freeport, I thought this was going to get a better bounce. It didn't. We're right back at the lows. We want to see it hold this 38.50 level or so. If it drops below that, I'd say, it's worth considering ditching the entire position. However, if we do get some type of bounce, it would be back up to with a target of 43 to 44. So it's a decent bounce, but right now the price action isn't there. Just to bring it up, silver rebounded, basically a double bottom off this 32, let's call it 32.50 or so. Right now, silver looks pretty decent, and if we start to clear above this 34.50 level, where we had resistance, and then we got the breakout, a tag of it, a continuation higher, and then a failure, and then flushed right through it. Now we're back at those levels. If we start pushing above, get towards 35, I'll have to think that this sell-off was nothing but an opportunity to get long silver. Oil appears to be in a range. You definitely have the top end of the range around 108, 109, 110-ish, and the bottom of the range is down towards 105. It's hard to read this chart for now, although, right now, just like the rest of the market, we got to bounce, so that's something to trade off of. However, you're buying in the middle of the range, really closer to the top end of the range, so I think it's worth waiting for if you're trying to get long something like oil. I'm actually going to jump. Take a name like ConocoPhillips, which performs similarly to the price of oil. Looks like we're forming some type of topping pattern. It's worth taking some profits in. There's nothing wrong with it. Halliburton, just one thing I want to say is I'm completely out of this position. Sold out somewhere around this $36 level. We were long off of, actually it was back here. First of all, we were getting long around this 34.5 level, 35. Had a nice little trade to the upside. This pullback was where I made most of my money. Bought some options along with stock and had a nice ride to the upside. I actually sold, I like 30 cents from the top, so that's pretty good. But I would stay away from this. Alright, back to Apple. Looks pretty good. However, considering we're at the top end of the range, point of control for the month, you watch this 548 level. If we start to roll over from there, we may see some more selling pressure. And we look at the bottom end of the range, point of control for January looks pretty good, 510 or so. That's where you want to look to be buying Apple again. It's volatile. What I've been doing is using credit spreads to take in the the premium from the high volatility. So raking in some premium both on the call and put side, and that's the advantage of having, you define your risk and you make sound decisions. And I think that on Apple, the right decision right now is to collect premium. Chesapeake Energy, just be careful, and that's just because we got to pop off of these levels, and just like Halliburton, I closed all of my option positions on Chesapeake within probably 25 cents of the high, so less than 1%, and that shows you the accuracy of volume profile. So that's just something to be aware of. And Chesapeake, I actually did buy some longer dated options a couple days ago because I still figure, if this thing's still trying to make a bottom, then I'm still early to it on a longer term scale. I didn't buy a big position, but I'm involved. I'm willing to take a small loss on it if it doesn't, if it starts selling off again and can't, let's say it gets down to 22 or so, I would be looking to really consider ditching that long call position. But I think it's an at the money 24 or 25 strike going out to some September maybe. So I think it's an interesting opportunity. Ford, we're in balance. You can see this is trending, and right now we're in balance. $13 our high, $12 is our low. Let's make it easy. You want to buy buy 12, sell 13, and it's not that much. It's not much difficult than that. One thing I want to say: if we get above 13.25, we'll probably have another dollar or so of upside. That's pretty good. Kodiak Oil and Gas. This is a name that I've been long since these lows, since this day back here. I've had a call spread, the $10 by 12.5, expiring in the summer months. Pretty impressive bounces that we've been seeing. And since earnings came out and the stock got crushed, traded sub $9.50, continued lower, bounces off of February's point of control, almost to the dot. Right at this let's call it $9, and from there we've seen a 10% rally. So pretty good move. Monsanto, if you remember this name, we traded it, we got the breakout. Just want to say that it's at an interesting opportunity. You look at this $77 to $78 range on the downside. If you want to get involved to the long side, and I'm not saying that it could easily continue lower and trade back down towards 70, for example. But going against, the long side right here, right now, at least you have your risk defined around this $77, $78 level. If it doesn't give you a pop back up towards 83 or so, then you're going to lose a little bit of money. But it's an opportunity. I don't think it's the best opportunity, but it's something worth looking at. Walter Energy, 5% bounce on Friday. Looks like we're going to go test 66 again. If that's your trade, maybe the 62 half by 65 call spread expiring. We have had, the main thing is you want to define your risk, and I see right now 66 or so is the ceiling. So why not, small call spread? And I wouldn't go that far out in time, maybe even this Friday, 62 half by 65. But the main thing is this looks like these mid 50s are defining your lows, and if that's the case, this is in a $20 range, and it's right now a $62 stock, and it's pretty volatile, but it's been profitable. And if you're looking for some real potential outperformance, if you can trade these swings, you're going to do very nice on a name like Walter, but it's very volatile, so it's just something to be aware of. Alpha Natural Resources, you remember this one. This did not work out to the upside. We were expecting an upside breakout back at the end of January, the beginning of February. It ended up being a fake out, and it was a nice trade to the downside. So the main thing that you can learn from this trade is we got the move we were looking for, nearly a 25% move to the downside, but we were wrong on the direction. And even when it was down towards 20, there was opportunity to basically get short Alpha Natural Resources on earnings. Instead of selling it, I was buying it. The trade was profitable. Ended up losing some money on it, but that's trading, and the idea is keep your losses small and let your winners do what they're going to do. Amazon, just holding shares in this. One thing I want to point out is on the same day I think I gave the idea for the gold call spread. I sent an email out saying selling Amazon, as in taking profits on the calls we had. Ended up trading at one point for like 50% gains or something. And I took mine at 25 and 35 or something like that. And I exchanged those profits for a position in Broadcom. Now Broadcom has gone from 30. It's up 4% since I bought it, and that's pretty good. But the more important thing is, I also avoided a almost 2% drop in Amazon. So really, I've gotten a 6% swing on that money. So the opportunity cost, you can see how important that is. Now Amazon, it could still work out to the upside, but if it does not, and if these are lower highs that we're seeing, then I'm going to be glad I took my profits when they were there and exchanged my stock for something else. Amazon's one of those names where a lot of people don't understand it fundamentally, including myself. Their growth rate is outstanding. They definitely have a big presence online. They dominate online retail. But when you look at a Broadcom, which has a much more... you can understand the fundamentals better is what I'm saying. Basically, if it goes in an Apple product and an Android product, you're probably pretty safe. And Broadcom, along with Qualcomm, do just that. And you can see how well Qualcomm has done. 52-week high on Friday. Now, I'm going to bring up the daily chart of Broadcom, and you can see we're bouncing off the point of control for the year. We've had a monster run off the lows, a pullback to the point of control, to the 200-day moving average, to the bottom of the Donchian channel, 50-day moving average moving straight up, whole moving average moving straight up. This is an easy buy on weakness, and I still think that there's another at least $1.50 to $2 left in this trade. But I'm really holding for a bigger move in Broadcom. I'm expecting this range that it's really been stuck in from $38 down to $32. I'm expecting a breakout. I'm expecting it to go back to the mid-40s where I plan to sell. But for now, you're working on building a position with the realization that 32 or so is your not absolute downside, but you want to be able to manage your risk and make sure that you're not losing any too much money. So, for example, you could buy, say, half of a position, half of a full-size position, put half of that half, so a half of, let's say, we're just going to stick with the position size, doesn't matter. You take that position that you bought, and you put half of your stop under these recent lows around 33.70 or so, and you put the other half down towards 30 or 30ish. What that does is it mitigates your risk, one, by taking a stop as close as you possibly can from this most recent swing, and then two, if you want to keep a position in Broadcom because you think eventually it's going to break up to the mid-40s, holding a fourth, really an eighth of a full-size position, it shouldn't be anything. Like, if it goes down 10%, it should not bother you. And that's one of those things with Broadcom, that you can do. Right now, I'm, with the expectations that call it 38 or so is the ceiling. And I realize, but that's still about a 9% gain off of these lows. And that's just something that, I think is a pretty good risk reward. I do think that Broadcom's going to go higher, so I like this trade. Wells Fargo, I'm not sure if I announced this one, but I did buy a call spread on this, and I'm not sure how I feel about it yet. It's working, and it's profitable. It's not that big of a position, but I kind of like this, and if it can break above these highs, which it may or may not, I like this for a trade. It's 31 by 33 call spread, another 4% to the upside, and I'll be taking profits. I may be taking profits on another strong day or two. Let's say we get up to 32.25. The profits should be satisfying enough to where I can take it off and forget about the position. As much as I, in reality, wish I accumulated Wells Fargo back at the lows, or call it $23, $24, I didn't, and I shouldn't trade it like that. Rather, trade it like, tactically. You're looking for a bounce, and you trade the bounce. Now, we're already, 3 days into this bounce, so I wouldn't recommend this position now, but you look at any stock that's been going up, any pullback on that stock is probably going to be bought at least once to at least test the highs that it was, trading at. And that's generally the way stocks trade. So if you're looking for opportunities, just look for stocks that are, pulling back to a level, call it a point of control for the month, and you take the opportunity. It's 8 out of 10 times you're going to have a profitable trade, and if you're winning on 80% of your trades, you're doing pretty good. So really that's all. I still own a position in Win, which is at an interesting spot. 120 matters, and if we start to get a bounce, I'll probably go with it again to the upside. But right now I'm holding a sixth of a position size, and I just forgot about it. I'm still profitable on the trade, so I don't really care about it. Las Vegas Sands, this looks like it's topping out, but at the same time, it's still doing good. It's $3 off its 52-week high. I still think that this goes higher. Would like to get in on a pullback just to show the family. MGM, this is a name that I'd rather stay away from. It's a Las Vegas play, where a Las Vegas Sands is more of a growth play, and it's important to have that, to understand that difference, to stay profitable. Under Armour, this is a monster, and it continues to work. Really hope you got in around the 75 level. That's when we were buying. You should have, you should be. This is a pretty easy stock to hold right now, and I don't want you to not be holding it. Celgene, another one. I think I flagged it the other day. At least I hope I did. And also Polaris. If you remember these have been names that have been working, and I think they'll continue to work. So, anyways, this is a pretty lengthy video, but I hope it helps. Trade discipline, and realize the expectations probably in a market consolidation range, 20 points or so, and if that's, 40 points. And if that's the case, then, trade what's in front of you, not what you want. And right now, I do think that this uptrend, for now, is over. It could consolidate for a couple weeks and then continue. But right here, right now, I don't think that the upside, for example, to 1400, I don't think it's there right now. So take care. Have a good weekend. Talk to you Monday.